Garcia, and I want to show you how to deal with landed cost. Landed cost is when we include the cost of shipping, cost of insurance, cost of customs, cost of any external cost outside of our direct inventory purchase cost into the inventory value. And I'm going to show you how to do this in QuickBooks Pro, QuickBooks Premier, or QuickBooks Enterprise. I will not show you how to do it in QuickBooks Online on this video, but it would work the exact same way. We're going to have, let's talk about the problem that we need to solve. So when we receive the inventory in QuickBooks, using the standard workflow, we create a PO, we receive a bill, we book the inventory at the cost only based on the vendor's cost. The external costs affecting the entire acquisition price, the landed costs, such as freight, insurance, customs, is typically going straight into an expense. So that causes a problem. So let me show you the typical example here. So I'm gonna go ahead and create the bill for receiving some inventory. So let's say I'm gonna receive inventory from my vendor here. And let me put here that I received it in January. So let's say I bought some pants and I also bought some shirts. And we'll bought 1,800 pants and 1,200 shirts. Actually, as a matter of fact, I had it all written down here in a slide. Where is it? There it is. So we're going to do 1,200 pants, 1,800 shirts. This is going to be the cost of each one. And then we're going to have our insurance and freight costs, and we have our custom cost. Okay, so we're going to put all this information in there as separate transactions. So it was, again, 1,200 pants, 1,800 shirts. So we'll do 1,200 pants, 1,800 shirts. Perfect. And there's my regular bill from my vendor. So I received the inventory, 17,850. So I'm going to hit save and close. And now when I look at my balance sheet, I immediately see that I have $17,000 in inventory. So let's say that we get two additional bills here. One from a freight company, which is who we pay to do the actual freight. So I'll select here USA freight company that does import. And let's say that they send us a bill, let's say for example, almost at the end of January. And the bill for this one was $32.50. We have an item here called freight, which is perfect. We put here $32.50 and then we hit save and close. Now what happens is that goes straight into my expense. Notice it goes into my profit and loss. Let me explain it better by going into the item itself. So the typical setup is we have an item here called freight, and the item called freight goes straight into freight costs and goes straight into shipping income. If you try to put this somewhere else, it's going to become a huge mess. So that's actually the correct way of doing it, right? So we have some sort of cost of goods sold for the freight cost and some sort of shipping income if I was to use this item on a sales scenario. Now the issue that I have now is that my inventory should actually be worth this $3,000 more, but the problem is that now this is showing as an expense in January. Let's do the other example as well. Let's create another bill here, and let's say we paid our customs. So we paid, and this could work with insurance and any sort of external expenses. And we received this bill, let's say February at some point, and this was $17.50, and we have an item just for that. Customs, there we go, and then I'll hit save and close. So if I look at make sure this has 1750 here. So if I look at my profit and loss, so depending on when the bill date is or when the check date is, that's hitting my profit and loss in two particular differently places. So let me tell you what the problem is. The impact of this is that if I go and sell some of these inventory, so let's say I have a customer that I'm going to sell some of this inventory, not everything, but some of it. So let's say I'm going to sell them some pants, and let's say we're going to sell them, let's say 500 of these, and then we're going to sell them some shirts. And let's say this is 600 of these, and this would be mid-February. I hit save and close. Then all sorts of crazy things happen with my financials because look, I have January a losing month because I posted my freight expense on January because that's when the bill date is, and then my sales are in February, and it's also a little bit profitable, but it's also a big issue because when I look into my balance sheet on the left side, I need to have the portion of this customs and import cost is seen in my inventory asset. Right now, if I look at my inventory valuation report, look at it here, they're showing for 850 and 425. So let's talk about the solution. Let me go back to the PowerPoint here. The solution is I need this extra $6,000 of both customs and freight in this case. Whoops, this is supposed to be, let me just whatever the amount is, let's just say is 5,000 here. So we'll leave it like this. So I need this extra amount to be divided by, I need the 5,000 to be divided by the total number of items, which in this case is 3,000. So I can add I can add the additional cost, whatever it is, 1 point, whatever it happens to be, into each item. So let's take a look at the issue at hand here. So my total freight cost for these two deals are the 1750 and the 3250. These two added together adds up to $5,000. So now I have to go back into my original bill, and this is the correct way of doing it. And I have to add up these two items here, so that's 3,000. And I have to take out a calculator, which I can do it here real quick. So I can take out my total expenses, in this case my freight costs, were 3250, and I'm going to put this as a negative number. And then I have the customs, which were negative 1750. Okay, that's a total of 5,000. Then I have to take that 5,000 and I have to divide it by the total number of units. So let me put here 3,000. And then 1.67, this is the additional per unit cost I need to add to each quantity. So when I go into item here, I need to make sure that each particular unit I add 1.67, and then I come back in here and add plus 1.67. Now, because of rounding, this number, sometimes these two together will give me the exact amount. In this case, see, I had a difference of $10, and that could be a problem. And if that's the case, I just put it back into freight cost. That's not a big deal. And it's always a little tiny little margin of error, and that's the only margin of error that's gonna post in my profit and loss, but it's not gonna cause that much of a big problem. So I'm going to go ahead and hit save and close here so we can actually see exactly how this played out. So when I go back into my profit and loss, I actually get to see that my customs expense here got reversed in January, but it was included in February. So in order to fix these two here, I would have to go into my original customs expense and make sure that I just backdate this, put this back in January. That way, at least this is matching the bill date. And sometimes I know that could be an issue, but we want these two numbers to wash. There it is. So as these two numbers wash here, we see that the only margin of error that we have is this $10, and that's going to be okay because of rounding. So we should be generally okay with that, but that's actually a lot better than the other value that we had there, that we had some negative number throwing off our profit and loss. But this is the beauty of this, is when I go look at my inventory valuation summary, now my landed cost, it's actually truly shown in my inventory asset, and that's the big advantage. And so that's basically what the procedure was. So in a nutshell, let me just go back and because I did this kind of fast. What I did was the original cost here was 850, and then this one was 425. So I took my entire freight costs and my shipping costs, all my external costs, and I add them into the bill, the original bill where the inventory is. I added them as negative, and by adding them as negative, it's going to reverse it from the profit and loss. And that addition, I divided by the total number of quantity of the products, and I divided that by each unit, and that's how I came up with the additional $1.67 per unit. Okay, the next example is going to be a little bit fancier, so we're going to have to pay attention with a lot of detail. On this example, we're going to talk about allocation of landed cost, but based on other attributes other than quantity. So we're going to talk about maybe weight, volume, or cost factor. The key component here is we need to have some sort of custom field in the purchase order so we can use this, and we're definitely going to need Excel to do some sophisticated calculations. So I'm gonna go ahead and delete this bill that we had created earlier on the example earlier, so we can actually use it. I'm gonna keep the same freight costs, by the way, because the freight costs themselves are gonna be using from the same example, and I will delete the invoice as well. So the only thing I really want to see here for illustration purposes is that we do have the 1750 for customs and importing costs, and the 3250 for freight. So that's gonna kind of gonna stay the same. So let's create the vendor, the PO, I mean, which will be the standard workflow for this. So let me go ahead and create a PO, and then I'll create for pants, and that's gonna be 1200. And let's say the original cost of this was 850 because we actually didn't know how much the calculated landed cost is. And then I'm also gonna put shirt here, and this is gonna be 1800. Okay, and let me go ahead and also enable two custom fields I created. Let me show you what I mean by that. So I went into each item and I clicked on custom field, and I make sure I created weight per unit, and I also created what I call customs factor, which is how we calculate the cost of customs. So by doing that, I'll be able to use some fancy calculations in here. So let me go ahead and enable both of these custom fields. So weight per unit and custom factor, and your vendor doesn't need to see that. This is just for your internal use. And let me go ahead and do the PO again to make sure all this stuff auto populates. So I'm going to put here pants, and that's 1200, and then I'm going to put here shirt, and that's 1800. So I need to use the PO because I'm going to use these custom fields to make calculations, and that's how we're going to discover what the allocation of these expenses is going to be on each unit. So let me go ahead and save this. And again, this would have been your regular original PO. Whoops, this is supposed to be 450. This would have been your original PO you sent to your vendor. You wouldn't have to make any calculations of freight or anything like that in the PO itself. The PO itself is going to stay pure. Let me just double check what my product cost was. I had to calculate 425. So let me just stay consistent with the example there. So I'm going to put there 425. There we go. Okay. So when the bill comes in, the challenge is when I go receive this PO. So I'm going to go into vendors and receive bills, and we're going to talk about what I mean by that. The challenge is when it's time for me to create this bill, I need to figure out how much am I going to allocate to each unit. But this time around, I'm going to use other factors. I'm not going to just take the 5,000 and divide it by this number. I'm going to use a different factor. So I'm going to leave the bill open here for a second because we're going to have to get back to it soon. But let's work from the PO. So the first step is I need to export this into Excel. So there's really no great way of doing this. You have to hit Control Y on your keyboard or click on Reports. Transaction Journal is sort of the same thing. So Control Y gives you sort of the report mode of the transaction. And I also want to make sure that I turn on those custom fields that I'm using. So I have weight, and then I also had a custom factor, and I have to make sure that I turn on quantity. That's useful too. And I'll turn on the rate or the amount. I forget. Yeah, the amount. There we go. Okay, so I'm going to turn on all my columns here that I'm going to use. So I like in the last example, I used quantity only, but now we're sort of focused on the additional attributes here, the weight and the customs factor. This is really what we're going to focus in. But we also need the quantity. That's key. So let me just get rid of the ones that I don't need. I don't need any of these things here. Just for the Excel spreadsheet, I'm going to need those quantities there. So I'm going to click on Excel, create new worksheet, and then I'm going to do some magic in Excel. And this is how I'm going to determine what the incremental cost that I'm going to add to each unit. And this is going to be tons of fun. And I do this with tons of clients that really appreciate this because, knowing exactly how much a product costs is a real big deal for some people. So the first thing I'm going to do is I'm going to take the entire weight of the pants. So I'm going to multiply the weight times the quantity, and that sort of be the first step. So I know that in the container itself it's 300 pounds, and then I'll do the same thing for the other one. and that's 882. Okay, so now I can just subtotal these two, and then I know that the entire shipment is going to be 1,182 pounds. So for the weight factor, for the weight factor, I can actually just take, this will give me the proportion. So I can take that divided by the total, and I can do the same thing here, this divided by the total, and this gives me the weight factor. So whatever the freight costs are, I just multiply it times the freight, and I know exactly how much I need to allocate freight wise to each unit. So I'm just going to take that number times the entire freight cost, which in this case is 3,250. And I'll do the same thing for this. And now I know that I need to allocate $800 to the pants, and in this case, $2,400 to the shirts. But I need to do it per unit. So I would have to go back and divide this by the number of units again. So let me do it by the number of units. So these are now my incremental, this is my incremental cost in weight that I need to add to each unit. So I'll put here weight cost unit. Okay, so this is my first number that I wanted to get, and I want to do the exact same thing with the customs factor. So in this case, I want to multiply. This is the customs now. So I multiply the customs factor times the units, and then I'll do the same thing for the pants, the shirts and the pants, and then I also subtotal this. Okay, and now what I can do with this is the exact same thing. So now I know that this is the total, so I can take that number divided by the total. That gives me the proportion, right? And I can do the same thing here. I can take this number by this, and that gives me the other proportion, and this is going to be a different factor. Notice that the factor here was 25% and 74%. This was at 30 and 70. So this allows me to allocate things much smarter, right? So instead of just taking the entire amount and doing it by quantity, I actually take a real scientific approach to figuring out exactly how much of my customs, how much of my insurance, how much of my weight, whatever happens the calculation to be. And this was 1750, I remember, and I multiply that times that, and I multiply this times that, and then once I get that number, I divide that by the total number. Yeah, I know this is very convoluted, but it's good to know the exact calculation by the total number. And now I know exactly how much I'm going to add. This is my other bold number here. This is the 2 incremental landed cost units to each product. So now I want to know how much my real sales price for my, in this case, the pants should be. And it's going to be, in this case, 850, right? So it'll be the same 850, 8.50 plus the new additional cost of weight plus the cost of customs. Okay, that's my new sales price, my new cost, landed cost for this unit. Same thing for this product, so it was 425 plus that weight cost plus the custom cost. So now I know exactly how much I should allocate. So now this product should be 9.64 and this product should be 6.27. So I would go back into my, in this case, the original bill. So I don't have to touch the PO. The PO stays the same. And I go back to my original bill. Where are you? So window, there it is, bill. And now instead of this being 850, let me go back. I forgot what the number was. It's going to be 9.64 and then 6.27. There we go. So 9.64 and then 6.27. Okay, and then I have to come back here under expenses, right? Because I need to be able to match this, and I have to do the negative just like in the same example. So the customs in this case was negative 1750, and then the freight was negative 3250. Okay, now the addition of these two need to give me the same amount of money that I'm paying to the PO. So I have to be careful about the rounding as well. So if I go back to my original PO, is supposed to be 17,850, and that's the same amount that my bill should be. So I have to stay sensitive to that, right? So I need to make sure that my bill, let me back up, it should be 17,850. That's $4 difference. So that's when I said we can just throw it there to one more sort of number in there, and that's the margin of error, and that's okay. There's always going to be a little margin of error because of the rounding of the items, and it's always, you could put it to freight costs, you could put it to bank service charge, you could put it into anything really where you'll be kind of hidden in there. So by doing this, these $2 amounts add up to my real bill amount that I end up paying my vendor. I save this, and just like the last example, now my inventory asset, when I pull my inventory valuation report, my inventory assets are valued exactly at my landed cost. And then every time I sell it, it's going to post the correct cost of goods sold and the correct gross profit. And now you're going to have an accurate representation of the value of your inventory without throwing your customs expenses into cost of goods sold directly on the period. Hope you like that. If you have any questions, just send me an email.